Good morning, everybody. Here we are on the third week of July. It's Monday, July 16th. Came off the heels of a very defensive week last week. We had the wheat markets down anywhere from 20 to 25 cents last week. The corn market down around 20, beans down 60. The meal market down around $14, and the soybean oil market down around 105 points. The only salvation in the marketplace has been crushing margins, which were making new contract highs last week and up roughly around 17, 18 cents. The suppression continued to start off this week in the overnight trade. We got the wheat market down anywhere from 2 to 4 cents, the corn market down 1, beans down 2, the meal market unchanged, and the soybean oil market down around 20 points. Some of the markets last week and overnight are making new contract lows and/or we're at our lows of the move. Soybeans making new contract lows last night. The corn market making new contract lows last week along with the Minneapolis wheat. And then, like I said, our meal and our soybean oil markets also on their lows for the move. As suspected, we are also seeing that the trade flow, money flow, has been getting on the net short side of the marketplace here in the corn and the beans. They added to their net short position in the soybean oil. They are still net long the soybean meal, but not as long. Pretty much net even in the wheat, soft red winter that is, long the hard red winter, and short the Minneapolis wheat. Later on this morning, we'll get our weekly export inspections coming on out. Once again, we're not really much on the demand side of the ledger right now. We're still looking at the supply side. We'll also be getting a NOPA crush number coming on out roughly at around 11 o'clock this morning. Crush numbers as far as the crushing margins being quite strong, expecting somewhat of a strong crush rate. Needed to be because USDA did raise the crush on the USDA report last week. Then after the close, we'll get our crop progress and condition numbers, which once again we're running in the 70% percentile, good, excellent. So anyway, how do I want to say it? The trade is getting short. We're in still this weather scenario, crop progress. That is the driving force. Put politics aside and/or money flow. And we'd like to think that maybe there's still a little bit smidgen left to go in the marketplace on the downside. But all we're really trying to go and do is that we're not running out of grains right now. We still got a 2 billion bushel carry out for corn. We still have a 400 to 500 million bushel bean carry out. We're going to add to that going forward if we have the yields going on up. So we're out there perhaps trying to recognize when a bottom can come into play as far as maybe money flow seeming to cease, trying to press the market lower from these price levels that we're currently at, and that's what we're trying to recognize. Once again, these are my opinions, not that of ADM or ADMIS. Thank you.